Hello, welcome to the European Open briefing for Tuesday, April the 25th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at the latest developments in the currency markets today. So it's quite a start this morning, but we still have much of the risk appetite from yesterday. Of course, risk appetite got a big boost on Monday from the French election result, where the centrist Emmanuel Macron managed to make it through to the second round. And he currently has a strong lead in the polls, giving him a good chance of beating the far-right leader Marine Le Pen. European stock markets were also sharply up yesterday. The dollar also is up against the yen, but it's not doing as well versus other currencies, particularly the euro. Another notable mover this morning was the Canadian dollar, which fell to a 4-month low, and this comes after the US government imposed import duties on Canadian softwood lumber products, so that had a bit of a impact on the loonie. And in commodities, oil looks set to end its run of 6 consecutive days of losses, but it's only very marginally up this morning. But let's start now with the euro. We can see that big jump yesterday, but it's held fairly steady around 1.0860 against the US dollar. It seems that the 1.09 level is a bit of a resistance level for the euro. In the past as well, it's managed to it's failed to rise above that level on previous several attempts, but it's not too far from those highs. We still have very strong risk-on sentiment this morning. The centrist candidate Emmanuel Macron has a 60-point lead over Le Pen, giving him a very strong odds of beating her on the May 7th second round. But also in the wider picture, given what we saw in the Netherlands, the Dutch elections there, and then the regional elections in Germany as well, this suggests that perhaps the populist movement in Europe has peaked. Also, we had very good German IFO survey data yesterday. The IFO Business Climate Index rose to a near six-year high in April, suggesting that the German economy German growth accelerated during the first quarter. And the biggest gainer in terms of stock market yesterday was, of course, the Paris CAC 40 index, which closed up 4.1%. Shares in Frankfurt, London, and other major European bourses were also sharply higher. The next focus now is the European Central Bank meeting on Thursday, although the ECB is not expected to say anything much, or it's obviously going to leave policy unchanged for the time being. And given what we saw in March, where the markets were very sensitive to Mario Draghi's words, we're not likely to see Mario Draghi will likely be more careful what outlook he portrays at the Thursday meeting. Moving on to the US dollar now, we can see that the dollar, although it's doing not too badly against the yen, it's managed to hold above the 110 level. Well, actually, it did dip briefly yesterday. It's risen back above that level this morning. The dollar index, on the other hand, is stuck below 100. The main focus was important this week for the US dollar. We've got GDP data on Friday, but before then we've got the tax announcement by the US Treasury Department tomorrow. There's been a report in the Wall Street Journal that said that the corporation tax will likely be cut to 50%, or at least will be proposed to be cut to 15%. But even if we do get a positive result on tomorrow, or positive statement regarding tax cuts and generally tax reforms, on Friday there's a possibility that we might have a US government shutdown because the Congress needs to approve a new spending bill in order to raise the debt ceiling for the US. Otherwise, this has happened before as well under President Obama, and that could potentially delay several policies, particularly Trump's plan to build a Mexican wall, but it's still too early to speculate whether or not there will be a government shutdown. Moving on now to the Canadian dollar, because the loonie is actually at a 4-month low. USDCAD hit a fresh high of 1.3565 not a short while ago. We had a surprise announcement by the US Commerce Department where they imposed 20% tariffs on Canadian softwood lumber. This comes after US lumber producers complained about unfair Canadian subsidies. Canada has said they would retaliate by restricting US milk protein products, but it looks like this could have a potential big impact on Canadian exports that are currently valued at $5.66 billion. And also the fact that oil prices have been slipping sharply over the past week, that's also been weighing on the loonie, which is looking rather bearish at the moment. And commodities now, we can see here oil prices in purple in the chart. That it hasn't been doing too well. It's dropped back below the $50 a barrel level. It only got a small boost from the risk appetite yesterday before slipping back. The reason why they fell sharply yesterday was because Russia said that well, they were actually complaining that the current deal is restricting Russian oil firms' output, and if the deal doesn't get extended before beyond June, Russia may raise production to a 30-year high. So that was received negatively by the markets. And also worth mentioning that Russia, who's not an OPEC member, hasn't officially said whether or not it wants to extend the output deal. Given that more recently several OPEC members, particularly Saudi Arabia, they said they're open to, or they're willing to extend it beyond June for a further 6 months. So obviously that's and given that fact that we already have a large supply glut in the market and we've got rising US production, all that is weighing on oil prices. Gold is also not doing too well lately, given of course the big boost in risk appetite after the French election. The only thing limiting the gold's losses is the geopolitical uncertainty over North Korea, given that its threat to conduct a nuclear missile test. And finally, looking at today's economic calendar, we're not going to have too much major data. We did have business climate index coming out of France, which beat expectations. We've got UK government borrowing figures that are coming out shortly. In the US, focus will be on housing data. We've got the Case-Shiller 20 City House Price Index, as well as new home sales. And of course, we're going to have the Conference Board Consumer Confidence Index. That's watched closely. It's expected to ease slightly in April. That's it from me. Thank you very much for watching and have a great day.